LTC Properties stock, ticker symbol LTC. This stock is down 9% year to date. And on the 27th of July, LTC presented quarter results where they beat on FFO and revenue. Analysts think they will miss on their next earnings, which is quite interesting. Most people love LTC stock because of the monthly dividend, and I understand why with dividend yield at 7%. The problem that I have is the lack of growth, but more on that in a minute. Let's dive into the recent earnings and fundamentals first. And I'm very excited to see what you guys think about the stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So, what does LTC do? LTC is a real estate investment trust, investing in senior housing and healthcare properties, primarily through sale-leaseback, mortgage financing, joint ventures and structured finance solutions. LTC's investment portfolio includes 213 properties in 29 states with 29 operating partners. Based on its gross real estate investments, LTC investment portfolio is comprised of approximately 50% senior housing and 50% skilled nursing properties. When we dive in the most recent earnings report, we see that total revenues is up a decent amount year over year. But expenses is going up significantly higher due to impairment loss. Last year, net income was up big time, primarily driven by the gain of sale of real estate. So that is why these numbers are quite different. And it's the same story with the earnings per share. Dividends per share were reported at $0.57, and with FFO sitting at $0.66, they are covered, which is the good part. But it has to be said that it isn't much, which worries me a bit. And when we check the investment type breakdown, we see that own portfolio represents 66% of the total revenue. Financial receivables represents 9.1% of the investment and 5.5% of the revenue. Mortgage loans represents 25% of the revenue. When we check the property type, we see that assisted living represents 53% of the investment and skilled nursing 45% of the investment. And as mentioned earlier, LTC has 29 operators in 29 states with 212 properties. And here we see the weighted average lease term. A big concern that I have is that almost 14% of these leases expires in 2023 and 16% in 2026. We also see some other high numbers around these years. To me, this doesn't look any good. And another important number to me is the net debt to EBITDA. In here we see that it is sitting around 6.1, which is a decent number. I prefer a number between 5.5 and 6.5. And now that we know more about the company, it is time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. LTC is a 1.3 billion market cap company. PE ratio is not a fair metric to use with REITs, so I will be using the price to FFO instead. Right now it is sitting at 12.3, indicating that they might be undervalued. Later in this video I will show you my 3 price targets for LTC stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 189 million, and in this graph we see that revenue went up in the long run. For a REIT it is kinda steady. We see that margins are going up and down quite a lot, and most recently it took a big decline, which is something that I don't like. EPS is following the same pattern as the margin, so I would prefer a bit more steadier pattern here. Analysts expect 2023 to be a bad year in terms of growth. After that, it is expected to see low to mid-single digit growth in EPS. For the revenue, it is a pretty different year, with growth expectations of 52%, but after that it is expected to see low single digit revenue growth. Return on assets is sitting at 6.1%, which is a decent number for a REIT. Return on equity looks good, and the most important number, return on invested capital, is sitting at 11.4%, which is a great number, and slightly higher than the 5-year average, so that is also the good part here. Current ratio is at 13, which is way too high in my opinion, so this worries me quite a lot. Right now LTC has 953 million in debt. I prefer companies that can pay down at least a big chunk of their total debt with the total cash. LTC has 7 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. But it's not really steady and consistent. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. When shares outstanding are decreasing, it increases your ownership in the company, increases the EPS, lowers the PE ratio and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 7%, which is a great number. Annual payout is at $2.28 and payout ratio is at 86%, which is above the average for REITs. Since there is no growth in dividend, these growth numbers are at 0, which is kinda disappointing. And if you take a look at these numbers, the dividends paid since 2012, you see that LTC did increase the dividends back in the days. But ever since 2019 there was no dividend increase. In this graph we see the expected dividends in 2023 and 2024. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to stay flat, which is again disappointing. Overall these dividends look pretty interesting to me, but how about the historical returns? I decided to compare LTC stock with the overall market, in this case the S&P 500. Next to that I added CHCT and CTRE. On the 5-year chart we see that LTC underperformed the S&P 500 big time, with minus 6% return including dividends. The S&P 500 did beat all stocks in this list by a significant amount. On the 1-year chart it looks pretty similar, with the S&P 500 beating these stocks again. All these stocks have a negative return, which kinda hurts to see. On the 6-month chart it is the S&P 500 with the highest return again, 11% in total. LTC is at minus 10%. On the 1-month chart it is again the S&P 500 with the highest return, but all are at a negative number, which is very interesting. LTC has the lowest return. So bottom line, LTC underperformed the S&P 500 short term and long term. But with the stock hammered down quite a lot, it could be an interesting buying opportunity. So is this the perfect time to buy LTC stock? Well, let's check the 3 price targets that I created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 2%, 4% and 6% based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 35, 37.5 and 40%. And for the free cash flow margin I'm putting in 47, 49 and 51. For the PE ratio and the price to free cash flow I'm putting in 14, 15 and 16. My desired annual return is 15% since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now LTC stock is at $32. I hit analyze and we see a lot of red numbers. And since this is a REIT I'm only focusing on the discounted cash flow value. We have a low price target of $20, which is a big drop from the current stock price. We have a mid price target of roughly $25 and we have a high price target of $31. To me, the mid price target is the most justified here, indicating that this stock is overvalued right now. My final conclusion on this stock is that I think this company won't do well in the future. With low revenue growth expectations and fundamentals not being great either, I do think you should watch out with this one. Dividend yield may seem very attractive, especially with monthly payouts, but there is almost no growth and payout ratios increasing, which is not a good thing. I will skip this stock for now and analyze them from time to time to see what happens with the company. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I'd really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching and I will see you in my next video.